Welcome back to the deep dive. Today we're going deep on Bharti Hexacom Limited. We're looking at their Q2 results for the fiscal year 2026, so that's everything up to September 30th, 2025. And our mission here, as always, isn't just about the headlines. We really want to get under the hood, understand the strategy. How did they pull off this, well, pretty huge profit growth? What moves are they making? Network stuff, AI partnerships, you name it, that are driving these numbers. That's what we want to unpack for you.
Yeah, the sources definitely paint a picture, and the main theme seems pretty clear. It's a successful execution focusing on, let's call it premiumization, and just being really efficient operationally. The top-line figures themselves are quite impressive. Total revenues, they grew 10.5% year-on-year, came in just over 23 billion rupees. Solid. But, I mean, the number that really catches your eye is the profit. Net income before you account for any exceptional items, it exploded. Up 66.4% year-over-year. That's 4.2 billion rupees.
66% jump in net income. I mean, wow. That's huge for a company this size. Okay, so let's break down the business. They've got two main parts, right? Mobile services and then the homes and offices side. Where's the money actually coming from, and how are those two bits growing differently?
Right, so mobile services, that's the core. That's where most of the revenue is, about 22.4 billion rupees this quarter. And that itself is up 10% year-on-year. But here's the really key insight, maybe a bit counterintuitive. This growth, it's all about value, not volume.
Hang on, wait. You're saying revenue's up 10%, but they didn't just sign up a load more customers?
Exactly. In fact, their total mobile customer base was actually slightly lower this quarter compared to the last one.
Huh.
So that 10% revenue bump, it came purely from getting their existing users to, well, spend more. They're boosting the quality of the revenue, not just the quantity of customers.
Okay, that clicks. That ties right into this premiumization strategy they keep mentioning. But then you've got the homes and offices bit, smaller. Yeah, but it sounds like it's playing a totally different game.
Totally different playbook. That's the, aggressive growth story. While the total revenue there is smaller, about 880 million rupees this quarter, the growth rate is just, well, staggering. It's up 47% compared to last year.
47%.
Yeah. This part of the business is all about expansion, grabbing new customers. They added 60,000 net new customers just in this quarter. That brings their total home customer base up to 0.6 million. And are now in 117 cities.
So clear split then. Mobile is squeezing more value out of established markets. Homes is racing to plant flags everywhere. How are they managing that crazy expansion in homes without just, sinking under the cost of digging up streets?
Well, they're using what they describe as an asset-light approach. It's partnership-driven, especially for the fiber to the home, the FTT stuff. Instead of building every single connection themselves, they're smart about it. They use local partners, existing infrastructure when they can. It's kind of like, think of scaling software, but for pipes and wires. Minimize the upfront cash burn, maximize the reach.
Smart. Okay, let's circle back to mobile then, because that 10% revenue jump with flat users is still really interesting. The classic measure for premiumization is ARPU, right? Average revenue per user. What's that telling us?
The ARPU numbers are, well, they're the smoking gun, really. Mobile ARPU jumped significantly. It hit 251 rupees this quarter.
Okay.
And that's up 10.1% from 228 rupees just a year ago. So that increase, it confirms people are upgrading plans, using more expensive services.
And the main premium service these days is always data, right? Are people really using that much more bandwidth?
Oh, absolutely. You see it clearly in the traffic. Modal data traffic grew, get this, 27% year over year. That's 1,935 petabytes in total for the quarter.
Petabytes. Okay, put that in perspective. What does an average user consume?
The average customer is now chewing through 30.7 gigabytes every single month.
30 gigs a month.
Yep. And that figure itself is up 18.5% from last year.
That's incredible. I mean, 30 gigs is enough data to stream multiple series in HD every week. It really shows a massive lifestyle shift they're tapping into.
Exactly. And it's the smartphone users driving this. They've done a good job converting people. Smartphone data customers, the ones actually paying for and using all this data, they now make up almost 79%. Let's see, 78.6% of their total mobile base.
Wow.
That's 1.6 million new smartphone customers added over the past year.
Yeah.
They're strategically locking in those high-value users.
Right, but if you want to offer a premium service, especially with all that data flying around, you need the pipes to back it up. How's the network investment looking? Are they still building out?
They are, yes. They're maintaining investment, but also seem focused on optimizing, expanding where it really matters. They added 357 new towers over the year. That brings their total count of mobile broadband base stations to over 92,000. So yeah, this continuous network improvement, that's the foundation that lets them charge that premium ARPU. It has to be there.
Okay, let's switch to the big financial story now, that huge profitability jump. Revenue growth was solid, fine, but a 66% spike in net income, that screams efficiency gains somewhere. How did the margins improve so sharply?
It really comes down to efficiency and scale working together. Their main operating profit figure, EBITDA, that grew 20.1% year over year, landing around 12.5 billion rupees. But the crucial bit is the margin. Their EBITDA margin expanded significantly. It went up by 4.3 percentage points, hitting a really impressive 54.2%.
54% margin. I mean, that's fantastic, but it does make you wonder, how much more juice can they squeeze out? That kind of margin suggests they're already running a very tight ship on costs.
They absolutely are. If you look at their operational expenses, excluding things like access charges and regulatory fees, those only went up 5.7% year over year.
Ah,
So revenue's growing almost twice as fast as their costs. That leverage, that's the core reason the net income soared like it did.
got it. Now, what about stability? Debt's always a big one in telco because of all the infrastructure spending. How does their balance sheet look? Are they managing their debt well?
Incredibly well, it seems. Their net debt, and this excludes lease obligations, which is important, it fell dramatically, down 42% compared to last year, is now around 28 billion rupees. That's a huge reduction in debt, and it significantly lowers their overall risk.
And what does that mean practically? We often hear about that net debt to EBITDA ratio. You mentioned it improved from 1.35 times down to 0.64 times. Is 0.64 good?
Oh, 0.64 is extremely strong. Basically, that ratio means they could, in theory, pay off all their main net debt using their current annual core earnings in just, well, a little over 6 months.
Wow, okay.
Yeah, it signals really excellent financial health, gives them loads of breathing room on finance costs.
And that breathing room, is it also showing up in their cash generation, or did they just slash spending to make the debt look better?
It seems like a bit of both, actually, working in their favor. Operating free cash flow, so that's the cash left, after they've paid for capital projects that grew 48% year over year, reaching almost 8.9 billion rupees. And what's interesting is that this cash growth happened even though their actual capital spending, their CapEx, for this quarter was down 18% compared to last year.
So they spent less but generated more cash from operations, getting more bang for their buck, essentially.
Exactly. Better returns on the capital they are deploying.
Okay, let's shift gears a bit. We've got the strong financials, the premium mobile strategy, the expanding home space. Now let's talk about the forward-looking stuff, the strategic moves to keep those high-value customers happy. That Perplexity AI partnership sounds really interesting.
Yeah, this is a potentially major move. It's in partnership with the wider Bharti Airtel group, but they announced they'll offer a free 12-month subscription to something called Perplexity Pro. It's for all their customers. And Perplexity Pro, it's basically an advanced AI search engine. It gives you real-time research answers in a conversational way. Goes way beyond just, standard search results.
Right, so they're bundling in a pretty cutting-edge digital tool. How does giving away free AI access fit into that whole high ARPU premium customer strategy?
Well, it becomes part of the value proposition, right? It helps justify the premium price point. They're trying to position themselves not just as the guys who provide the reliable connection, but as your gateway to genuinely useful digital tools. Tools that can boost productivity, help with decisions. It deepens that digital relationship, makes it stickier,
Yeah.
harder to justify switching away just for a slightly cheaper plan.
Makes sense. And if you're targeting those digitally savvy, high-value customers, keeping them safe online has got to be critical. What about anti-fraud? Are they doing anything specific there?
Absolutely. Security is huge for retaining premium users. Their anti-fraud work, again, done with Bharti Airtel, seems to be paying off big time. The data they released shows they've cut customer financial losses from fraud by almost 70%.
70% reduction. That's massive for building trust.
It really is, and apparently the effectiveness was even recognized by the Indian Cybercrime Coordination Center, the I4C. So it all ties together, you see. These digital add-ons like Perplexity, the strong security measures, the solid network quality, it all feeds into what they call their omni-channel approach. It's all geared towards getting and keeping those quality customers, which naturally fuels that ARPU growth and the bottom line we talked about.
This has been a really fascinating deep dive. So just to wrap it up quickly for you listening, Bharti Hexacom delivered some truly exceptional profit growth, the engine. High-value customers driving up ARPU, consuming tons of data. Operationally, this success let them significantly strengthen their finances. That net debt to EBITDA ratio dropping to 0.64 times is a key indicator of just how much more secure they are now. And strategically, they're looking ahead, trying to stand out by bundling in advanced tech like AI tools and focusing heavily on security.
And maybe here's the final thought, something provocative for you to chew on. They hit that incredible 54.2% EBITDA margin, boosted net income by 56%. That kind of efficiency. You usually see that in markets that are already pretty mature, highly optimized. So the really interesting question for you, the learner, becomes, how long can they keep up this aggressive margin expansion within their current areas? Are they going to have to push pricing even higher on their existing premium base? Or will they need to make a big push into new geographic territories to maintain this kind of growth velocity? Where does the next jump come from?
That's a great question, linking their strong balance sheet directly to what they might do next strategically. Thanks for joining us on this exploration of how telco infrastructure is now merging with consumer AI. We'll catch you on the next deep dive.